Hello dear students, myself CMA Padmaja Buzruk. I will discuss accounts of joint stock companies. Please go to study note number 1, accounting of shares and debentures. I will discuss illustration on redemption of preference shares. Illustration 31, balance sheet of Pixel Limited as on 31st December 14 is given, rupees are in lakhs. 10 lakh equity shares of 10 each. 1 lakh redeemable preference shares of 100 each. Less call scenarios on 20,000 shares is given. Then securities premium account, reserve, profit and loss account and creditors. On the asset side, you have fixed assets, investment, stock, debtors and bank. On 1st Jan 15, fixed assets costing 40 lakhs were sold for 32 lakhs. So fixed asset whose cost was 40, they have sold it for 32 lakhs. So there is loss on sale of fixed asset, 40 minus 32, 8 lakhs loss on sale of fixed asset. If you see profit and loss account balance is 15. After this sale of fixed asset, profit and loss account will become 15 minus 8, that is 7. Because this is profit 15, loss 8 lakhs gets adjusted with this. So 15 minus 8, 7 lakhs will be profit and loss account balance after selling this fixed asset. It was decided that on 1st February 15, company issued sufficient number of equity shares so as to finance redemption at 20% premium and leaving a balance of 10 lakh in reserve. So there is a printing mistake. Company decided to redeem preference shares at 20% premium, and for that sufficient number of equity shares to be issued at par is given. Number of equity shares to be issued is not given, that you have to find out. And after leaving a balance of 10 lakhs in reserve is showing 30 lakhs. Company wants to maintain 10 lakhs in balance in reserve after redemption. So only 20 lakhs reserve is available for redemption. So whatever is available for redemption you have to take, and after that find out number of equity shares to be issued. All payments were made except to a holder of 10,000 shares who could not be traced. So whatever was due to preference shareholders, all payments were made, but there was one shareholder having 10,000 shares who could not be traced, so it is not possible to pay him the amount due. Company also made a bonus issue to the existing equity shareholders in the ratio of 1:10 as on 31st December 14. You are required to pass journal entries. Equity shares, existing equity shares are 100 lakhs. They are entitled to get bonus in the ratio of 1:10. So if for 10, one bonus will be given. So for 100 lakhs, 10 lakhs bonus will be given. First, I will show you working notes so that it will be easy for you to understand the journal entries. Redemption of preference shares at 20% premium. Redeemable preference share capital is 1 lakh into 100. Rupees are in lakhs, so it is 100. There is call scenarios on 20,000 shares. So these 20,000 shares cannot be redeemed because one of the condition for redemption of preference shares is shares are to be fully paid. So 20,000 into 100, 20 lakhs. It is not possible to make redemption of this. So possible redemption is only 100 minus 20, 80 lakhs. Redemption is at 20% premium. So 20% of 80 is 16. Total amount to be redeemed is 80 plus 16, which is equal to 96. Profit and loss account as per balance sheet is 15, which I have already shown you. Loss on sale of asset is 8. 40 minus 32 is 8. So out of profit and loss account, only 7 is available for redemption. Reserve as per balance sheet is 30 lakhs. There is restriction on use 10 lakhs, they want to keep it after redemption. So from reserve available for redemption is 20 lakhs. Premium on redemption is 16. We have seen this. 20% of 80 is 16. Premium on redemption is 16. But as per balance sheet, securities premium account is having only 15. So remaining 1 lakh you can take from profit and loss account. Profit and loss account balance also we have seen available for redemption is 7. Out of that, 1 you can use for premium on redemption. So remaining 6 gets transferred to CRR. See here, redemption of capital is 80. From profit and loss account 6. Why? Because as per balance sheet 15 was there. From that loss is to be deducted 8. So 7 is available. 1 is for premium on redemption of preference share. So remaining is 6. From reserve you can utilize 20. 6 plus 20 is 26. So 80 minus 26, fresh issue of equity shares is 54. Rupees are in lakhs. Some shareholder is untraceable who is having 10,000 shares. So 10,000 into 120 because redemption is at premium. 12 lakh rupees company cannot pay, which will remain outstanding. Rupees are in lakhs, so 12 is outstanding. Amount to be paid to redeemable preference shareholder is 96. Just now we have seen 80 capital plus 16 premium. Out of that, company cannot pay 12 because one shareholder is untraceable, his dues are 12 lakhs. So amount to be paid to redeemable preference shareholders is 84 lakhs. Now we'll see journal entries one by one. First journal entry is sale of fixed assets. Bank account debit 32, profit and loss account debit 8 to fixed assets 40. Fixed assets are sold and loss transferred to profit and loss account. Bank account debit to equity share capital 54, fresh issue of equity shares is 54. We have seen these calculations, how fresh issue of shares 54 is arrived at. Redeemable preference share capital account debit 80, premium on redemption debit 16 to preference shareholders 96. Transfer to CRR is 26. General reserve debit 20, profit and loss account debit 6 to capital redemption reserve account 26. Securities premium account debit 15, profit and loss account debit 1 to premium on redemption account 16. Premium on redemption is to be taken from securities premium and balance from profit and loss account. Redeemable preference shareholders to bank 84. Actually amount due to redeemable preference shareholders is 96. Out of that, one shareholder having 10,000 shares is untraceable, so his dues 12 lakhs are to be deducted. So 96 minus 12 is 84, amount to be payable to redeemable preference shareholders. This I have already shown you. Capital redemption reserve account debit to bonus to shareholders. This is entry is to show bonus due to equity shareholders in the ratio of 1:10. This I have already told you. For 100 lakhs equity shares, they are entitled to get 10 lakh bonus. And bonus to shareholders to equity share capital, that is conversion of bonus shares to equity share capital. So in this illustration, in this video, we have seen illustration on redemption of preference shares. Thank you.